This
the
conference will now be
premium bus
recorded.
service, Volvo model. I hope everybody are able to see the screen.
Yes, ma'am.
So how many of you were able to solve this? Okay, so let's start doing it. So I had taken the values here. So cost of the bus is 75 lakh. Maintenance per year, it is 10%. Escalation on the maintenance, what they are telling, it is 15%. Life of bus is for 4 years. So depreciation is going to happen 25%. So debt is 75% of the entire amount. I'm going to take the loan, bank loan. Equity, it is 25%. So out of 100, if it is 75% debt means 25% will be equity. Interest on debt is 15%. Tenure for loan, so it is the useful years of the bus, the same thing, 4 years. So tax rate is 5%, they have told. Interest income, so they are telling that it is 5%. Diesel rate is 64 per liter. Diesel price escalation, 50% escalation is going to happen. Inflation, so inflation on the driver cost and miscellaneous expenses, that is 15%. Seating capacity of the bus is 35. So load factor is 50% of the bus weight. Okay. So tariff 350 per ticket. Escalation rate in tariff. So 10% they are going to hike the ticket rate. Fuel efficiency, if you see, so 5 kilometers per liter. Driver cost, it is 600. Miscellaneous cost rupees per trip, it will be 300. Toll amount will be 800. So the route that we are going to cover is from Mumbai to Pune. So the distance from one side is 155 kilometer. Estimated trips time they are taking is 3 hours. So per day, how many trips they are going to do means 4 hours. So this is the assumption what we have done. Okay, now let's see how to go about with the calculation. So the first thing, so I have to calculate the revenue. So revenue here, what I'm going to take is equals 350. That is the ticket cost, 350 into how many number of seats we have, 35 seats, into 50% of the load factor. 50% of the load factor into, so how many trips we are going to take per day, 4 trips. So this is for one day. Okay, so this one I need to calculate it for 365 days. Okay, so the ticket cost, the number of seats, the load factor, number of trips, and 365 days. So per year the cost, the revenue will be 89,42,500. So what they are telling, so here the revenue will be increased by 10% every year. So I'll take equals previous year value into 1 plus 10%. I'm going to drag it. So I got my revenue for all the 4 years. Other income, so I need to calculate the cash flow statement, then only I'll be able to put this. So this one I'm going to do it later. Fuel cost. So coming to fuel cost, so how much is the distance? It is 155 kilometer. Okay, so the fuel efficiency is 5 kilometers per liter. So I'll take 155 divided by 5. Okay, that is the this one, fuel efficiency, into per day we are going to take 4 trips. Okay, so this is for 365 days. And what is the cost of the fuel they are telling? So it is 64 rupees. So into 64. Okay, so 155 is the distance. So fuel efficiency 5 kilometers per liter, it is for 365 days, and the cost of diesel fuel is 64 rupees. So and what they are telling here, diesel price escalation 15% they are telling. equals previous year value into 1 plus 15%. I'm going to drag this. Next, maintenance. So maintenance,
Ma'am,
how much? Yes, ma?
ma'am, can you repeat fuel cost?
Fuel cost is, so distance, how much we are covering? 155 kilometers, isn't it? So what they are telling, fuel efficiency they are telling, so 5 kilometers per liter. So I'm going to take that value in the brackets, 155 divided by 5. Okay, into how many trips like that we are going to take? We are going to take 4 trips. So what is the cost of this one? So fuel 64, and this is for 365 days. Okay, so this one is just for 1 day. Okay, I need to calculate it for 365, so this value has to be multiplied with 365. Okay, and diesel price escalation they are telling 15%. So equals previous year value into, open the bracket, 1 plus 15%. So I'll come here and drag. So I got my value. Okay, so here 15% increase will be happening on the previous year value. Okay, this is my fuel cost. So maintenance is, so that is on my revenue. So equals on revenue. So they are telling 10% per year. So maintenance will be happening into 10%. Okay, so here they are telling is escalation in the rate of maintenance. So it is on the revenue 10%, and year on year 15% escalation is happening on the maintenance. Okay, so I'll come here, take the previous year value into 1 plus 15%. So till here you people have done it properly, just check. So I'll show the formula. Check these three values, girls. Done?
Ma'am, 2 minutes, ma'am.
Yes, ma. So the one who told me that they'll be traveling on Wednesday, who it is?
That's me, ma'am.
Name, ma?
Nazli Azad.
Nasia. So I have informed management. So they told by tomorrow they will let you know whether you will be able to take it or what, because the college coordinator, the college director who is there, he is on leave. So he has not come. I have informed the other person in the this one management only. So I told they have put the word. So tomorrow, just put me a reminder around 11 o'clock something in the personal message. Okay. So I'll confirm you whether you will be able to take it, like what timings you'll be able to take, because 1 hour only the exam will be activated, it seems. So whatever the timings, your class timings is there, no, so from 6:30 or by 6:30 everybody should join. So they will share you the link, they will tell the procedure, everything, how to take up with the exam. So 1 hour it will be activated. So I told like this, one girl is traveling, so what can be done? So they told by tomorrow they will inform. So at the same time you just put a word to Maria ma'am also, check out what can be done, because later part if the college people they get to know, it should not be a trouble. Okay,
I've told
so we'll see.
Maria, ma'am, and she said that she will try to get it changed to either a day prior or a day post the exam.
So I have informed, they told that let us check out what can be done. So let's see, tomorrow you just put a reminder to me. Okay,
Okay,
around
ma'am.
11 o'clock. Okay, ma.
Okay.
Done with this, girls?
Yes, ma'am. Yes, ma'am.
So now next I need to calculate the driver cost. So driver cost, what they are telling, it is 600 rupees. Okay. So per day he is going to take 4 trips. So equals 600 into 4 trips. So this is per day. Okay. Into 365. So that will be 8,76,000 per year. Okay. And what they are telling, so there is escalation in the driver cost. So inflation. So here they are telling figures assumed for the driver cost and miscellaneous expenses. So 15% escalation is happening on the driver cost equals previous year into, open the bracket, 1 plus 15%. So I'm going to come here and drag it. So miscellaneous cost. So miscellaneous cost, they are telling 300 equals 300 into how many trips we are going to make, into 4. So this is per day into 365. Okay. And here miscellaneous expenses also 15% escalation is happening equals previous year value into 1 plus 15%. And I'll come here and drag it. Now toll amount. So toll amount, how much they are telling? 800 rupees. So 4 trips they are going to make, and it is for 365 days equals 800 into 4. So this is per day into 365 days. So here this toll amount, nowhere in the this one they have explained that toll amount will be hiked. Okay, that nowhere they have mentioned. So this toll amount is going to remain same. So this toll amount is going to remain same. Okay. So now cost of revenue. So cost of revenue will be sum of this expenses. Okay. So that is fuel cost, maintenance expenses, driver cost, miscellaneous cost, toll amount. So this will be my cost of revenue. I'll come here and drag it. So look at the calculation, check. Getting it right, girls?
Ma'am, can you please show the values for checking?
Done, girls?
Done, ma'am.
So now I need to calculate the gross profit. That is my EBITDA. Okay. So equals sum of. So even though I have not got the values, so this both are related to my source. That is my revenue. Okay. So this value minus the cost of revenue. Okay. So once I enter the values over here, automatically the calculation will be proper. So here I will take, it is sum of revenue and other income minus cost of revenue. Then depreciation. So depreciation, so what they are telling, so the life of bus is for 4 years. So the cost of the bus is 75 lakh. So here I'll take equals 75 lakh divided by 4. So it is, depreciation is 1 lakh 87 18 lakh 75,000, and this depreciation, it is going to remain for every year, remain the same for every year. Okay. Next, interest expenses. So before I calculate the interest expenses, I need to calculate the debt schedule. Okay. Why? Because here only I'm paying the interest. So first I need to solve this debt schedule, and then I'm going to take this interest value over here. Okay. So now for that I'm going to calculate the debt schedule. So EOP, end of the period. So here 0. That is when I'm commencing my business. At the end of the period, I have taken the loan. How much loan I have taken equals 75 lakh into 75%. So that is 56 lakh 25,000. I'm going to take the loan. Okay. So the end of the period, whatever the debt amount is there, that is going to be my beginning of the loan. Okay. Beginning of the loan for the first year. So now they are telling that interest. So if you see, interest on debt is 15%. So how much loan I'm taking? 56 lakh 25,000. So on this amount, I'm going to put 15% interest. Okay, so now EAI. EAI means I need to calculate the equal annual installment. That is the PMT function I have to take. So equals, so PMT minus sign I'm going to take minus PMT. Okay, so rate is 15%, comma, N per is for 4 years, comma, present value. How much loan I'm taking? 56 lakh 25,000, comma, future value 0. I have to calculate it for end of the period. Okay, it is 19 lakh 70,000. So here now I have to find the EOP, that is end of the period. So before that, principal repaid I need to calculate. That will be EAI minus interest expense. So whatever the EAI, equal annual installment, in that if I remove the interest amount, remaining is the principal amount what I have repaid. Okay. So now here end of the period will be equals EAI minus principal repaid. So principal repaid is 8 lakh 45,000. I have repaid it. So here what will happen? So the previous year value. So this will become the end of, beginning of the loan. Sorry. It is not this. 1 second. So it is beginning of the loan minus principal repaid. Beginning loan amount, how much it is? 56 lakh 25,000. How much principal amount I have repaid? That one I need to subtract. So remaining is 44 lakh 98,000. So this value will become the beginning of the period value. Okay, I'm going to come here and drag it. So now interest expenses, it will be on this particular value into 15%. So I'll drag this one to EAI equals minus PMT, open the bracket. So this is going to remain the same. EAI, there is no changes. So this is going to remain the same. Okay, so I'll come here and I will drag it. So then here equals this value minus principal repaid. So I'll drag this and here it will be equals beginning loan amount in 45. So EAI minus the expense, the interest. So I'll come here and drag it. So at the end of the period, so it will be 0. Okay. So solve this debt schedule.
Ma'am,
Yes,
ma'am,
ma.
for me in the fourth year, the
Hmm.
debt is coming as 1 rupee. So how can I change it, ma'am?
So maybe the decimal values. So is there any decimal values you are getting in this?
Ma'am?
Are you getting any
Yeah,
decimal values, ma?
no decimal, ma'am. 1 rupee in the fourth year I'm getting, ma'am.
In the last.
Yes, ma'am.
That's
The
fine. That's fine. 1 rupee
it's
is
okay,
right.
ma'am.
It's
Okay,
okay.
ma'am. Okay.
So there might be slight variation in the values, not an issue.
Ma'am, can you show the values?
Ma'am, can you please explain how we have solved debt schedule? I didn't understand.
Debt schedule previously also we have done, Noma. So here I'm talking about the loan. Okay, 75 lakh rupees loan I'm taking. So the entire cost of the bus is 75 lakh rupees. So they are telling that 75% I'm going to take the bank loan. Okay, so 75% means how much? 56 lakhs 25,000 I'm taking the loan. So now from year one I have to repay the loan amount, isn't it? So beginning loan period, what it will be? So previous year closing loan, what it was there, that will become my beginning loan period. Interest expenses. So interest, how much they are telling? It is 15% interest they are telling. So interest on debt 15% they are telling. So here I'll take, so the beginning loan amount into 15%. Okay, so that will be my interest amount, what I am paying it for that value. So EAI, how much? Equal annual installment I'm going to pay, that is the PMT function. So I have taken minus PMT. So as per it, if you see rate, so what is the rate of interest? 15%. N per period, so that is for 4 years. Present value, it is 56 lakh 25,000 loan I am taking. Future value nothing, it will become zero. So future value will be zero. Type will be end of the period. Okay, now end of the period, how it is, what it is. So now I have to first calculate the principal repaid. Principal repaid means, so out of this amount, the loan amount, I have paid EAI 19,070, 19 lakh 70,000 rupees I have paid. In that the interest is 8 lakh 43,750 is the interest amount only. So the remaining amount, whatever it is there, that will be my principal repaid. That is 11 lakh 26,493. I have paid it back. So end of the period I wanted to check beginning loan amount minus principal repaid. So this remaining amount will be my EOP, which will again become the beginning of the loan amount. So I have dragged it here. Interest amount, so whatever the beginning amount is there, on that 15%. So I have got this. EAI is going to remain the same for all the 4 years. Okay, so EOP again, as I told, so here first I have to calculate the repaid, that will be EAI minus interest expense. So I got my principal repaid. So here I need to calculate the EOP, that is end of the period. So beginning of the period, the loan amount minus this year how much I have paid, that is 12 lakh. So this will become my end of the period. When I calculate at the end of the fourth year, the amount will become zero. So this one we have done it in the beginning only, financial statements. When we were doing that time only, we have done this debt schedule. Many times we have done. Why you forgot, ma?
Ma'am, I was getting confused between EOP and principal repaid. Now I understood.
No, EOP means end of the period. The loan amount that is remaining. Principal repaid means, so the loan amount that is remaining, it's in the beginning of the period. How much amount I have repaid it and the remaining. That's it.
Yes, ma'am.
Okay. So now here coming to interest expenses. So now interest expenses, I'll take this value. Okay, interest expenses. I'm just going to drag the same. So here I'll come and drag it. So whatever the value it is there, so it has come over here. Okay. Next, profit before tax. So profit before tax will be equals. So this is this value. So that is EBITDA minus depreciation minus interest expenses. EBITDA minus depreciation minus interest experience expenses, that will be my profit before tax. So first year it is a loss. Okay, so I will do it till this profit after tax, then you people can solve it. So tax, how much they are telling? So tax they are telling 5%, isn't it? So income tax, so here in the first year the value is going in negative, so nothing. If there is no amount only, then what I will pay? So it will be zero. So here I'll come to the next year into 5%. So whatever the profit before tax I have, so on that 5% I'll pay the income tax. Okay, so now profit after tax will be, so profit before tax minus income tax. So first year is loss, so this is what you need to get it. So solve this.
Done, ma'am.
What about others?
Ma'am, please wait for 2 minutes.
Yeah, yeah.
Ma'am, can you please show the values?
Done, ma'am.
Done, ma'am.
Okay. So now balance sheet we have to do. So let's come to the balance sheet. So balance sheet cash amount we are going to do it later. So PPE gross. So that is 75 lakh. And this is going to remain the same for rest of the years. Accumulated depreciation. So accumulated depreciation means what? So we have done worked on this one also. Previous year depreciation plus the current year depreciation value is called as accumulated depreciation. So equals, so D44, sorry, the first year it will be 0. Okay, nothing will be there. So here when I come, equals previous year value plus the PPE gross. One second. here depreciation value equals previous year value plus depreciation value of this year. Okay, so this one once again equals previous year value plus current year depreciation. Okay, so I'll come here and drag it. So it is done. Now PPE net. So PPE net will be equals, so PPE gross minus the depreciation. Total asset will be equals, so the cash amount plus the PPE net.
Ma'am, I have a doubt.
Yes, ma.
Ma'am, in the first year it will be 75 lakhs, but for the second
Yes.
year, the value in the asset side won't it be already included the depreciation that is 56 lakhs 25,000? That will be the opening balance of asset in second year, no ma'am?
Which one? This PPE gross. So here we are telling the PPE gross. So gross value I am telling. So every year, so whatever it is, the value that I have invested, 75 lakh rupees is the cost of the bus, that is going to remain the same for all the 4 years. In this, the accumulated depreciation, how much it is happening. So here we are going to calculate the accumulated depreciation. So after this, the PPE net, so the value of the bus minus the depreciation, I'm going to get this PPE net. So in the beginning, year zero, the cost of the bus, it remains same because we haven't started using the bus. So from the year one, after the depreciation, what is the amount? So as you are telling, the debt amount, here it is coming, right? See here. So 75 lakh, in that depreciation, if I reduce, so this is my PPE net. So the actual gross in that the next year. So the second year accumulated depreciation. When I decrease, so minus, so I'll get this PP net. So for year on year, so once after the useful 4 years, the value of the bus becomes zero. So initial cost of the bus, so year zero, it will be 75 lakh. So in the first year, the value of the bus after the depreciation, it is coming to 56 lakhs 25,000. So after the second year, the depreciation, so the value of the bus. In the third year, fourth year, the value of the bus becomes zero.
Okay, ma'am.
So I'll show you the formula. You people can try.
Ma'am, for 1 minute, can you show that the amount? Okay, ma'am. Done.
Done, girls?
Ma'am, can you please show the value? Done, ma'am.
Okay, so now let's calculate the liability side. So equals the debt amount is, so here we have. So I'm going to bring this value. Next, equity. So 75% loan, if I'm taking, 25% will be my equity, equals 75 lakh into 25%. So this will be my equity, and this is going to remain the same. Okay, for every year. So that is 18 lakh 75,000 equity. Retained profit. So retained profit will be, first year it is 0. Second year it will be, so here previous year value plus the profit after tax. Previous year retained profit. So previous year value, so nothing it is. So I'll take 0. Okay. Plus the retained, so profit after tax. So first year it is a loss. So next year equals, so the previous year value plus the profit after tax. So I'll come here and drag. So now total liabilities will be equals, so D50, that is debt plus equity plus retained profit. So total liabilities will be debt plus equity plus retained profit. So I'll come here. So I'm getting this. So once I put this cash balance, everything, it will come out properly. So now let's do this and finish.
Ma'am, can you please show the values? Yes, ma'am, done.
Okay. Next, coming for the cash flow statement. So profit after tax. So profit after tax will be equals profit after tax. So this one I'm going to take it. Depreciation. So that will be equals accumulated depreciation. So this one also I'm going to take it like this only. So depreciation once again. So here we have calculated the accumulated depreciation. So here I don't want to depreciation. So this one for every year the depreciation I wanted to keep it the same. So I'll take the previous year value. Okay, let's keep it the same. Then here cash flow from operations. So it will be equals sum of, so this values net income, that is profit after tax plus depreciation. So here 0. So now capital expenses. So capital expenses. So capital expenses when it is in the this one, how we are going to calculate? So it will be previous year plus current year. Okay. So capital expenses equals PPE gross minus current year gross, PPE gross. Okay. I'll come here and drag. So this is for the assets. So what it is? Previous year minus current year. Okay. So cash flow from investing. So equals sum of this previous year value only I'll take. Okay. Then debt. So that is liability. So liability will be, how it will be calculated? So current year minus previous year. Okay. So here equals, this is current year minus previous year. Current year minus previous year. So I'll come here and so I wanted you people to do it till here.
Ma'am, ma'am, under
Yes, ma'am.
capital expenditure,
Hmm.
ma'am, how did you take C44, ma'am?
This one. So
Yes,
here
ma'am, that one.
capital expenses. So here I have taken C44 in the sense that is my PPE gross. So previous year minus my current year value. So previous year, so when before I start my so calculation, it should happen like this previous year minus the current year. So year 0 I have already bought the item, that is my bus I have bought 75 lakh. In order to calculate it, so as per the formula, so to calculate the asset, so for that I have to take the previous year value minus the current year value. Okay, that's why here I have taken C44, that is my previous year value. So previous year PPE gross is nothing, so it will be 0 minus the current year.
Okay, ma'am, got it. Done, ma'am.
So now equity addition, so it will be equals equity minus previous year value. Okay, so I come here and I will drag it. So cash flow from financing, it will be equals sum of, so D66 and D67, that is debt and equity. See here I got the amount. So net change in cash will be equals, so cash flow from financing plus cash flow from investing plus cash flow from operations. So cash flow from financing plus cash flow from investing plus cash flow from operations. So I'll come here and drag this to. Now cash beginning of period. So beginning of period it will be 0. So ending period also it is 0. Okay. So here it will be ending period, whatever the amount it is there, so that will be my cash at the beginning of the period. So here it will be ending period will be equals beginning of the period plus net change in cash. come here. Okay, so here I'll come and I will drag it. Okay, do this.
Done, ma'am.
What about others?
Done, ma'am.
Check for the values. So now once as we have done all those things, I need to put the values which were pending. Okay, so other income. So that will be equals, so beginning of the period. I'll take this value into 5%. So here other income, what they are telling. So if you look at the comment, interest income on surplus cash. So here E72 into 5%. So I need to get this values. So E72, that is my beginning of the period. Cash beginning of the period. I need to take this here into 5%. So into 5% what? Interest income they are telling, on that I am giving 5% interest. So take this values.
Ma'am, could you show the amount? Okay, ma'am, done.
So next I have to put it in the cash balance sheet. So balance sheet, cash amount I have to take equals, so end of the period. So here I have to take cash end of the period and I have to drag it. So here it will be this funds in the balance sheet. Done, girls?
Yes, ma'am.
So
Yes, ma'am.
the values, these are the values what you need to get. Done?
Yes, ma'am.
So next we have to calculate the free cash flow equity. So here I'll take the value net income. So net income will be this value. So I'll come and drag it. So next is depreciation. So depreciation, I'm going to take this value. Next, capital expenses. So cash flow from investing. Next, debt repayment. Then cash flow of equity. So equals sum of, so D80 to D83. That is net income plus depreciation, capital expenses, debt repayment. So I'll show the formula.
Ma'am, could you show the amount now? Okay, ma'am.
So now let's check it here. Equals. So that is cash flow from operations plus cash flow from investing plus cash flow from financing. So I'll come here and drag it. Now here I'll tell equals IRR. IRR and pick this values. IRR, it is showing as error. Debt repayment. Sorry, this is debt repayment. So 30% IRR. So if we try to calculate the IRR from here, equals IRR. So I have to get both the same values. So return analysis, free cash flow equity. So from both the ends, IRR should be 30%. So if I'm making the investment of 75 lakh, I'm going to make the profit of 30% on the overall investment.
Ma'am, how did you get IRR, ma'am, in 30%? The first one which you did. You added debt, ma'am.
Which one? Yes, yes, I added the debt.
From where, ma'am?
So debt amount, so D66. So D66 is here, this value. So that is debt repayment. So the debt amount, whatever I have repaid, those value. So it is D61. D61 is which value? So free cash flow from operations. So this is the income what I'm getting. So once after the investment, this is the amount what I'm getting. So after repaying the debt, so the remaining amount. So here 0, it will be minus. So from next year onwards, I'm going to make the profit. So if you see overall how much is the internal rate of returns means 30%.
Done, ma'am.
Okay, I hope you people understood how to apply the calculation and all. So try it out. Again, if you are having the doubt, next class we will clarify it. Okay, tomorrow. So we'll be having the revision. So I have shared you the Excel notes and this one also PPT, financial modeling PPT. So from the Excel, follow the financial statements and whatever we have done the case studies. So it will be just multiple choice only. We not have to worry too much, but the questions might be from anywhere. Okay, so I will show you one model question paper which we have done it previously for the colleges only. That one I'll show you so that you will get some idea how the calculation should be done, how the exam will be. And day after tomorrow, so as usually how you are going to join the link, join the link. So they are going to share this one. So the instructions, everything only it will be shared in the group. You have to just follow the instructions and take up with the exam. Okay, clear girls? Any doubts in today's class? So the values here. Exam will be for 1 hour. It will be for 100 marks. 1 hour exam, 100 marks it will be. You can take it from your mobile or laptop, anything is fine. So once after completing the exam, just drop in a message in the group, okay? So that I have completed. So I'll get to know that you have completed the exam.
Okay, ma'am.
Okay, any other doubts, girls? Shall I wind up the session for today?
Yes, ma'am.
Okay. What about others? Only one person is
Yes, ma'am.
Yes, ma'am.
okay. People